I am a long-term believer in Tesla. I think that the shares are undervalued. Near term, I would be cautious. I think that there's going to be some earnings pressure on this based on some of the discounting that has happened.
Gene, when did you sell Tesla shares?
Basically tapped out, kind of blew through a market cap provision. So
at $400 billion?
Yes, I think it was.
What did it go to? You didn't get. You didn't.
Yeah,
you
we missed a lot of the
$1 trillion?
juice. We did,
What?
Joe. Yeah, we missed a lot of it.
Well, so we just initiated a position, Shauna, in Tesla. We thought that the sell-off had gotten overdone. We'd owned it years ago when Elon was in much bigger trouble than he is right now. Remember, he had SEC after him. He was sleeping on the floor of the plant. He was doing, podcasts, drinking whiskey and smoking a bong with Joe Rogan. And he was losing staff in a meaningful way. We learned, we took a double in the stock and we got out and we left a lot of money on the table. I think when you look at the growth, even with the demand slowdown, this is a stock you're going to want to own 3 to 5 years from now. Maybe not for the next 3 months, but that will give us an opportunity to add to our position. So that's one name.
Oh, I love you so much, baby. Can you believe it's been almost 2 years together? I don't know what I'd do without you, my little secret weapon. I love you. Oh, we're recording. That was nothing. Yo, editor, make sure that doesn't go live. I mean, that'd be really embarrassing. We definitely won't tell them more about this later in the video. Alright, so where were we? Oh, that's right. So in this video, 2 people who previously owned Tesla stock and previously sold Tesla stock and missed out on enormous gains on Tesla stock share their current thoughts on Tesla stock. Plus, a new note from Morgan Stanley. And a quick heads up to my Patreon supporters, which by the way, if you're not among them, you can join with the card in the corner or the link at the pinned comment. Posted an exclusive video today detailing the latest update around Tesla safety. Facts, which by the way, don't care about your feelings. And spoiler alert, you don't even need to join Patreon for this one. Tesla vehicles keep getting safer over time. What a shock. I know. But hey, if you want to see the full video, check it out on Patreon.
Nancy, even ahead of earnings season, you mentioned the fact that you were actively adding. What do you like right now, given all that uncertainty ahead?
Well, so we just initiated a position, Shauna, in Tesla. We thought that the sell-off had gotten overdone. We'd owned it years ago when Elon was in much bigger trouble than he is right now. Remember, he had SEC after him. He was sleeping on the floor of the plant. He was doing, podcasts, drinking whiskey and smoking a bong with Joe Rogan. And he was losing staff in a meaningful way. We learned, we took a double in the stock and we got out and we left a lot of money on the table.
Now call me crazy, but there may be a lesson here. What could that lesson possibly be? Well, you can't go broke taking a profit. Maybe there was an arbitrary rule here. Once we double our money on a stock, we sell it because then we can't go broke, which is absolutely true. You double your money, sell, you pay your capital gains tax. You end up with a fraction of what you actually profited because of the capital gains tax. So now you go, great. Now that I've locked in my profit, where do I put the money? The smaller amount of money because I've paid my capital gains tax, meaning I'll need an even greater return on that money once it's reinvested, given the capital gains tax, than I would have if I just left it in that stock and it continued to grow. Now, doesn't mean stocks will always continue to grow, but we've learned a lesson. Imagine having sold your Tesla stock roughly around 2018, 2019, based on the timing of these comments, could have been as late as early 2020, and then miss out on the stock going another 3, 4, 5x after you sold just because you decided, well, double my money, time to sell now, got to lock in that profit. Again, you can't go broke with this strategy, but you're probably not as likely to create substantial wealth with this strategy either. When I first became interested in investing years ago, in fact, probably 15 years ago, give or take, I began going to a lot of real estate investor meetups. Why? I wanted to learn from people with a bit more experience because that's what people with a brain generally do rather than making all the mistakes themselves. They go, well, let's talk to some people who've already made a lot of mistakes and try and learn what mistakes they made so I don't make those same mistakes. Every time at every meetup, I made a beeline for the people who had a little bit of grey in their hair and asked them a few questions. The first and foremost, what's your biggest regret, your biggest mistake you've made investing in real estate or otherwise? Every fucking person had the same answer. I bought this house. It doubled, it tripled, and then I sold to lock in my profit. But if I had have kept it, it would have been up an additional 420 quintillion%, and I'd be the first septillionaire in the solar system. But I didn't. Silly me. I sold. I wish I didn't. I didn't need to sell, but I thought I'd better lock in my profit. I'm not joking, by the way, guys. I literally asked this question to dozens upon dozens upon dozens of experienced investors over a period of years, and they all had the same answer. Their biggest mistake, their biggest regret when it came to investing was selling a great asset. They'd done the homework, the research, they had a long-term horizon, 20, 30 plus years, but it went up a ton and therefore they sold just because it had gone up, not because their thesis had changed. I thought, Everyone's making the same fucking dumb mistake. I'm not going to make that same fucking dumb mistake. If anyone's wondering, the first piece of real estate I purchased was back in 2010, and guess what? I still own it. Started buying Tesla stock at the beginning of 2016. Haven't sold a share. And I'm going to be saying the same shit in 10 years' time. Still won't have sold any.
I think when you look at the growth, even with the demand slowdown, this is a stock you're going to want to own 3 to 5 years from now. Maybe not for the next 3 months, but that will give us an opportunity to add to our position. So that's one name.
It's definitely hard to argue with her comments that you'll definitely want to own Tesla stock in 3 to 5 years' time. I have a very strong suspicion that in 3 to 5 years' time, people are going to look back with Tesla at a market cap under $400 billion and think, is that a typo? Was that meant to be 4 trillion or no? Huh? And now onto a long-term Tesla bull and tech analyst who definitely hasn't ever made the same mistake of selling Tesla stock and missing out on enormous future gains as a result.
Joining us right now to talk about the outlook for for Tesla and tech stocks is Gene Munster, managing partner at Loop. And Gene, we saw this stock under some significant pressure. We've seen it come back a little bit. How are you feeling about things as we kick off the new year?
Becky, I am a long-term believer in Tesla. I think that the shares are undervalued. Near term, I would be cautious. I think that there's going to be some earnings pressure on this based on some of the discounting that has happened. And there is this bias when a stock is down as much as Tesla just to want to own it. I sense that too. We want to own it in our funds. We don't own it yet because we want to optimize that opportunity.
If I'm hearing Gene Munster correctly, it seems like what he's suggesting is that he believes Tesla stock's likely to go lower after they report their earnings in a couple of weeks' time, and therefore they're not going to buy Tesla stock, as I record this, less than $120 per share because it might go lower based on the earnings results. Gene, my man, you just said you're bullish on the company. It's quite obvious that Tesla's current valuation is absolutely fucking absurd. The argument as to whether or not the stock could go lower, sure, that may be valid, but I have to question the decision making here. Is it really worthwhile waiting on the sidelines, hoping, which by the way, hope is not a strategy, hoping that Tesla stock dips lower when it is already absurdly cheap based on every traditional metric? It might work out for Gene, but to me, this is a very, very, very silly strategy. There is a reason one of the very first videos I ever posted to YouTube was entitled Waiting for Tesla Stock to Dip. Good luck. The whole point of that video was waiting might work, but the risk reward probably ain't there. Is this a bad time to remind everybody what Tesla stock was at when I posted that video? Because I'm going to do it anyway. Tesla stock is up over 400% since I posted that video. At the time I posted that video, there were comments, bro, you're an idiot, bro. It's going to go lower. Always works for me, fucking dumbass, blah, blah, blah. Didn't age well. It's not to say that waiting can't work out. It's just to say it's a really fucking dumb strategy if you believe in the company and you also believe the stock's cheap and you have a long-term horizon. It's like playing Russian roulette. Odds are you probably won't blow your brains out, but is it worth taking the risk?
And so the key here, of course, is we know the delivery numbers. We know the growth numbers, up 31%. That was about a 2x what the overall industry growth rate was. Typically, Tesla grows at about 3 to 4x the industry. So some of that gap, that revenue growth gap has closed. The delivery gap has closed. But again, I want to anchor back into what I think is going to be the A topic when they report on January 25th, which is going to be earnings. And just a quick math here, of course, they are discounting in China. They lowered prices by 13%. If you assume there is no other discounting across the globe when it comes to Tesla pricing, that would have a negative 15% impact on the March earnings. The street's looking for about $1.40 right now. If you start to factor in that there may be some further discounting, that number goes down. So I think that investors should generally expect about a 25% haircut to the March earnings. And that does not sound very optimistic from someone who's been bullish on Tesla for a long time. But I do want to underscore, I remain positive on this company. I think ultimately there are a few good reasons to own this in 2023. But I think that we can see some more pressure in the near term.
While Gene's points are valid in terms of pricing, if prices come down, earnings may come down temporarily. These are irrelevant blips on the short-term radar that change nothing about the long-term thesis. And this goes back to my point about waiting. Why sign up for additional risk? The risk that you're wrong about the stock moving, which, by the way, in case you haven't noticed, it's pretty hard to predict what a stock's going to do in the short term. If it wasn't, all the technical analysts and short-term traders will be quintillionaires, just saying. Given the unpredictable nature of a stock, especially something as volatile and anti-reality as Tesla, sometimes it surges on bad news and sometimes it collapses on amazing news, is it really worth signing up voluntarily for the additional risk that you may be wrong if you believe the stock is absurdly cheap? I would suggest doesn't make a whole lot of sense. We're looking at the historical price for Apple stock. The point that I'm making here is that while it may have made sense if you're a genius and can outsmart the market strategically, I'm not going to buy in 1997 in June, I'm going to wait a little bit more for the dip, maybe it'll be cheaper, maybe it won't, look 12 cents, I'm a genius, I got it at 12 cents, not 14. The same thinking could have occurred later. You know what, 26 cents a share for Apple in September 2000, that's a bit expensive, let's wait for it to dip. 25, I missed that, 27, 26, it's 33, no, it's 40, is it going to go, I'm going to wait, it's 41, that's too expensive, it'll come down, right, 80, it's like 5 times. Oops, what do I do here? I'm going to wait, it's too expensive. I better wait for the dip. It's now 218. Oh, it's like 10x already. What do we do now? This is awkward. You know what? I'm going to wait for it to dip. I'm going to wait. $4.30. Geez, I think we're about 20 times now. Okay, I'm a genius, and it's just really bad luck. Who could have possibly known that waiting for Apple stock to dip was not the best idea? If I had bought it back there, I'd probably be up about 52,000% in the next 20 years. Microsoft. Hopefully you guys get the point here, but I just wanted to also show Microsoft stock up 228,000% since IPO. There's been a general trend up. Now, sure, there's been some ups and downs. In fact, Microsoft absolutely got destroyed during the dot-com bubble, which I don't think too many people foresaw, otherwise there wouldn't have been so much blood in the streets. And one final example, Amazon stonk. Once again, Amazon is up approximately 100,000% all time. There's been a lot of ups and downs. Amazon stock, 9 US cents per share. That's absurd. I'm going to wait to buy the dip. It's 21, 23, 30, 90. Oh no, it reached $1. Okay, you know what? I'm going to wait till it gets back to 50 cents. Then I'll buy the dip. It's $5. It's 10 times more than my buy price now. Oh, geez. I guess I'll just wait. It'll be 50 cents again, right? $1. Look, 50 cents. See, I'm a genius. Oh, it's going lower. I'm scared, Daddy. You know what? I'm just going to wait because I think it might go lower. Hang on, let me just see here. Oh, yep, here we go. Maybe it's not going to... You know what? It's $2.30 now. It's $1. Oh, it's going lower. I'm going to wait to buy the dip. I'm definitely going to keep waiting and waiting and waiting. See, I'm a genius. These dumbasses. It was $4 like 5 years ago, and now it's there again. See, I'm a genius because I just waited. I wouldn't have made any money in these 4 years if I had bought it because I'm smart. So I did the right thing. Yep. Waiting to buy the dip's always a great strategy. As you can see here, it's only it's $6 now. It's $7, $6, $5, $7, $8. It'll come back. I'll just wait. It's fine. $10, $12. Wasn't I meant to buy 50 cents up, but then I got scared. Oh yeah, I thought it was going to go lower and then it didn't. Okay. Well, you know what? Maybe I'll change it. You know what? I'm going to wait till it gets back to $10 now. $10, right? I'll buy when it's $10, right? It'll definitely get back to $10, won't it? Yep. See, no $10. You know what? F it, I'm going to buy right now. $33 per share. Oh no, it crashed 25%. I'm a fucking moron. I want to kill myself. Next minute, up significantly. Did you get the point? If not, you're probably a lost cause and I won't even bother explaining it.
Gene, when did you sell Tesla shares? Or you had them in your fund at one point?
We did. They basically tapped out on a market cap. It kind of blew through a market cap provision. So it was a long time ago, but we had owned it a lot lower. But as it went up, we had to sell based on some market cap. I think we had a maximum market cap in that fund of like 400 billion. So when it blew through that, we had a forced sell on it.
At 400 billion?
Yes, I think it was.
What did it go to? You didn't go. You didn't.
Yeah,
you
we missed a lot of the juice. We did, what? Joe. Yeah, we missed a lot of it. I think one of the challenges that with some of these funds is that these small and mid cap funds they hold these companies until they're very big, and I think they lose some of their direction. And so we want to be
let your profits run and cut your losses, not cut your profits and let your losses run, right?
Props to Joe for a bit of low-key savagery there. Now, I understand Gene's explaining, well, we had a limit on this fund, okay? Why? That's the question. Imposing an arbitrary limit. I'm going to sell when it doubles or triples or at this market cap or that market cap. The question is why? Does it not make more sense to be looking rather than, okay, here's this arbitrary rule I've imposed on this particular fund or this stock, blah, blah, blah. Wouldn't it make more sense to think, what's the stock worth today? What do I think it's going to be worth in the future? And if I think it's going to be worth substantially more in the future than it is today, then why would I sell it? Seems pretty simple.
Well, in this case, we had some rules around the size of companies for being a small and mid-cap company. And when it blows through some of those targets, just to maintain that.
Hey, Gene, keep going. Sorry.
No, I was just going to say, yeah, we just want to keep our our products in line with our market cap provisions. So
Now, I get it. They had a fund, they had some rules, some limitations. It exceeded that, they had to sell. But again, going back to the point, this doesn't seem like a sensible way to invest. Imposing arbitrary limitations, forcing you to sell securities that have grown, denying you any possible future growth on said asset, this doesn't seem to make a whole lot of sense to me. And a new research note from Morgan Stanley, a very short one, chart of the day. We'll get to that in a moment. Kind of funny. Stock rating overweight, price target $250 per share. Basically doubling and then some from where we are today. The global EV market is experiencing a transition from acute undersupply to potential oversupply. Oh my fucking god damn it, dude. This is why I call them morons Stanley occasionally. I mean, it astonishes me how simultaneously intelligent and brain dead some people can be. This is Morgan Stanley. Read the date, January 10th, 2023. I quote, "The global EV market is experiencing a transition from acute undersupply to potential oversupply. The only oversupply here is brain damage within Morgan Stanley. You fucking idiots. Seriously? EV oversupply? I just can't believe how fucking dumb these clowns are. Legitimately. Even the trash EVs are going to sell for years to come. Make them. People will buy them. The end. Watch. Automakers are going to be panicking about their collapsing ICE sales. Yet they'll sell all of their shitty EVs. Yes, even the shitty EVs will sell. I can't believe that Morgan Stanley do not understand this. Now, I know they're reasoning, oh, there's a recession, therefore demand for everything is going to collapse. I just can't even, seriously. We believe 2023 is a year during which execution on manufacturing costs and supply chain management will further separate the winners from the challenged, both of which will be required to bring forth more affordable electric vehicle prices that can unlock further penetration growth. Capital self-sufficiency may also be tested during a time of negatively reset expectations. Over the next few years, we anticipate the rate of change of EV penetration has potential to disappoint. You dumb oh, yay. As investors, consumers, and regulators contemplate the hidden costs of diversification from a Chinese-dominated EV supply chain into a market where many players have yet to prove viability of the business model. Within our coverage, we believe Tesla is uniquely positioned to lead engineering and cost improvements that have yet to truly unlock the scale potential of the EV economy. Agree on this point. Nearer term, investors must contemplate further deflation across the EV complex that may drive an adverse risk of margin expectations. While Tesla may trade in a volatile, sawtooth-like range for some time, we believe a floor in the earnings must be reached before investors get comfortable with a floor in the valuation of the equity. And ladies and gentlemen, are you ready for it? The absolute fucking masterpiece of masterpieces. Morgan Stanley's EV penetration chart, which inexplicably seems to suggest a massive slowdown in EV adoption instead of an S-curve. Then a big ramp back up inexplicably. This will not age well. In fact, I challenge everybody watching to set a reminder to check back in about 5, 7, 8, 9 years time. And let's actually map actual EV penetration, the beautiful seamless S-curve, on top of this abomination. These are some of the dumbest smart people on earth right now. I can't believe they're willing to put their name on this and publish this research. The internet does not forget, especially this guy. On what planet? I just can't. Like, it hurts my brain to contemplate. This portion of today's video is sponsored by Athletic Greens AG1, which, amazing as it is, probably still isn't enough to help the adults over at Morgan Stanley think clearly. I don't want to oversell it. Good as it is, it can't perform miracles, at least not on that scale. As you guys saw in the intro to this video, Athletic Greens AG1 and I are truly inseparable. I've been taking this stuff daily now for almost 2 years, and it has completely changed the game. I'm an absolute health nut. That's one of the many reasons why I'm not a fat motherfucker, and that's also one of the reasons I use the term fat motherfucker to describe people who are unhealthily overweight. I'm trying to shame you people into not dying young. Without question, of all the things I do to optimize my health, performance, output, energy, mood, Athletic Greens AG1 has the biggest ROI, bar none. The biggest effect I've personally noticed is a massive increase in energy and no more afternoon fatigue. Many of my Patreon members will know I'm really obsessed about health, longevity, well-being, and energy. And this truly is my biggest hack. Athletic Greens AG1 promotes gut health, boosts immunity, boosts energy a lot in my case, and helps recovery. This stuff is no joke. It is packed with vitamins, minerals, nutrients, prebiotics, probiotics, plant-based enzymes to help with digestion. You can see some of the perks on screen now. It's keto-friendly, vegan-friendly, paleo-friendly. I take this stuff every day in the morning on an empty stomach. I take travel packs with me. If you too are all about optimizing your output, your energy, your well-being, your mood, and your health, you got to give this a try. Athletic Greens AG1 is a literal no-brainer. If you guys use the link in the description, athleticgreens.com/SMR, you can unlock 1 year's free supply of vitamin D, 5 travel packs, and the best thing of all, Athletic Greens offers a 90-day money-back guarantee. So you literally have nothing to lose and potentially a lot to gain. You don't have to take my word for it. Try it for a month or two, see how you feel. If it doesn't live up to expectations, get your money back. And if it does, which spoiler alert, it probably will, you can thank me later in the comments. You got nothing to lose and potentially a lot to gain. So check out the link in the pinned comment or head to athleticgreens.com/SMR. Not much point investing over the long term and accumulating wealth if you feel like trash now, is there? And back to the theme in today's video, I think a few investors have made some pretty big mistakes here and arbitrarily selling Tesla stock. The stock doubled, therefore I had to sell, lock in my profits. Didn't age well. Gene Munster there, imposing an arbitrary rule on a fund, forcing them to sell Tesla stock and missing out on probably a tripling from that point. And Munster today, attempting to wait in hope that Tesla stock will dip even lower for another buying opportunity after earnings, which by the way, could work out, but it seems to me like taking an unnecessary risk. Lastly, don't forget, posted another exclusive video today on Patreon, this time the latest Tesla safety data. Remember, facts don't care about your feelings. So, see you over on Patreon. Love ya.